So the PCE report is tomorrow, 1 hour before the market opens, and here is the market expectation. What's going on, team? It's Ricky here with Learn Plan Profit, TechBud Solutions. Hope that you guys are all having an amazing Thursday. A quick little recap on the day for my earlier video today. NASDAQ market is still testing that same resistance that we previously had. We did hit highs of 316.32. The more common resistance that we came back to retest during that aftermarket session is just 316 flat. Regardless, the NASDAQ market as of right now, even though, I talked about having and opening a short position, I'm never someone that is naive to think that the market can't continue to rally. One of the things that I pointed out is, again, we're still trading above the moving average. We're still trading above the EMA. And the market, based off of what is reported tomorrow, can make new highs. So again, just because I have I've been wanting to short the market doesn't mean that first off the market has to sell off, nor does it mean that I think that there's no possibility for the market to make new highs, because 100%, if tomorrow's report comes in lower than expected, the market can make new highs, right? We broke above the previous resistance range at 314, 315. Now we're testing that 316 resistance. We're going to go back to retest it tomorrow, and it looks like NASDAQ futures as of right now are doing quite well, right? They're not aggressively pulling back. Today was a very, very bullish day following the very bullish day that we had yesterday, Wednesday, March 29th. So tomorrow, March 31st, the last day of the month, right? We have the PCE report. For those that are unaware, PCE is the Personal Consumption Expenditure Index report. The really cool thing about this is that this is kind of like in my opinion, it's a less important CPI data report, right? The CPI data report, when it's released, in my opinion, it has more weight to the stock market. It tends to have a little bit more of an influence. The PCE, not so much, but again, it's still something that's important enough to follow up with as the Federal Reserve talks about it. You can always look this up yourself. This is something that's readily available and becomes available once the report is released. This is bea.gov/data/personal consumption expenditure report. But as you guys can see, the last one that was reported was February 24th, 2023. And then the next reporting is March 31st, 2023. The really cool thing about this is that for those that are unaware, PCE, it's a way that it tracks inflation, but it tracks it, I would say, in a little bit of a different way. When it comes down to the CPI data report, there's fixed items that it tracks month over month, right? If you've been following me for some time, or if you're part of our LPP team, you know exactly what I'm talking about, right? There's line items that it follows. When it comes down to PCE, it tracks not only items that the average household is purchasing, but as well as it's also tracking services, and that's something that the CPI data report does not do. The PCE report is known to have a lower rate of inflation, and as of right now, again, this is something that I wanted to bring to your attention. Right now, the actual PCE inflation report, is set at 5.4%. The previous was 5.3%, so we actually went up. And the overall forecast is for it to drop from 5.4% down to 5%. So that is the expectation for tomorrow, March 31st. So if you are asking the question, where do we expect to be after everything being adjusted, we expect to go from 5.4% when it comes down to the PCE index report, down to 5%. So we expect to see a decline. If we see that decline, the market should go up. If we see that the PCE report comes in hotter than expected, meaning higher than expected, then most likely the market should react in a negative way. Remember, the reason that tomorrow might be a little bit more important than ever before for any of these PCE reports is because of the news of the Federal Reserve thinking about pivoting, because of what's going on with the banking system. If we continue to raise rates as aggressive as we have been, it can put more banks, larger banks, into more hot water, So therefore, the idea of the Federal Reserve pivoting is happening sooner than expected, especially with inflation going from 9.1% down to 6% at the current rate. When it comes down to the CPI data reports, now we have this PCE report, which the Federal Reserve talks about all the time. What they're focused on is, as long as economic data supports the case that inflation is actually going down, the sticky inflation, then they can justify being less aggressive and or ultimately pivoting when it comes down to from rate hikes down to rate cuts, meaning that they actually cut back on interest rates and actually begin to lower them. The current market expectation, the reason that the market has been going up like you have been seeing for the past, what has it been, past week to week and a half, has been because of the bank failures and because of the expectation that the Federal Reserve will have to stop raising interest rates, which they didn't do in the last meeting, but that they will slow down and then begin to cut interest rates up to 1.25% by the end of 2023. That is what is factored in. Now, if this inflation data comes in hotter than expected, right, for the PCE index, and then on April 12th, am I correct? Let me go ahead and double check. I believe it's April 12th. April 12th, 2023 is the next CPI data report, which is known as the inflation report. If that comes in hotter than expected, the Federal Reserve will have to continue its fight against inflation and most likely continue to raise rates, right? And that's something that the stock market probably will not like. Remember, the way that the market is trying to react right now is through the eyes of the Federal Reserve. Right now, bad news is good news and good news is bad news. But there's only one difference, right? Right now, we want inflation to go down, right? But this PCE report, we need it to come down as expected or lower. This will support that the Federal Reserve could pivot. When it comes down to this up and coming inflation report, we want it to come in lower than expected. Those are two things we want to come in lower than expected. When it came down to, I don't know if you guys saw today, I talked about it with my LPP team, but initial claims and continuing claims were reported today. They came in higher than expected, meaning that more people filed for unemployment than what was expected. Well, why is that a bad thing? Well, that means that, again, more people are therefore losing their job. And although that looks like a good thing, that's actually, not the way that I would see it is more people actually reported for the first time for unemployment checks than what was originally expected, which is a good thing for the market because the Federal Reserve wants the economy to be slowing down. This is showing, it's a weird way to think, but it is supporting the case that hopefully more people are losing their jobs. Again, it's a very weird way to think, but by there being more job cuts, it means the economy is slowing down, and therefore the Federal Reserve can see that what it's doing with raising interest rates is slowing down the economy and putting pressure on businesses. Again, it's a very backwards way of thinking. Not trying to convince you. I'm not saying that I agree with the Federal Reserve. I'm just saying that right now, that is what I mean by bad news is good news and good news is bad news. The Federal Reserve wants to see the economy slow down. The only thing that we want to continue to see that drops is the inflation rate. That's all. So again, that report's going to be released 1 hour before the stock market opens tomorrow, just to make sure that we end the month, hopefully, on a green note. If you have any questions about this, I hope that you know that I'm one direct message away. But also, friendly reminder, I do trade live with one team and one team only every single morning right at market open, and that is the second link in the description down below. You don't have to join, but if you want the ability to watch me trade live every single morning and you think that it would be of value for you as a complete beginner to get access to that, then I would encourage you to take 2 minutes, click that second link down below, learn more about it, and to see if it's a good fit for you. As of right now, we are running our biggest sell, and on top of that, every new member gets entered 5,000 automatic times to our GTR or $50,000 cash giveaway. So if you've even been thinking about joining, then again, there's an additional incentive for you. I really do appreciate you guys' time. I'll see our LPP team tomorrow at Market Open for our live session, and I'm excited to see, and hopefully these PCE reports do come in lower than expected. But if not, then that means I can only add more to my short position. Until next time, take care, team.